Hi guys, my name is Michael. Welcome back. So things are moving really fast in the global financial space. Remember earlier today I was telling you about Japan and the issues that are happening over in Japan and how that issue in Japan has the potential to spiral out of control. Well, we'll come back to the United States and we're seeing panic in the stock market today, and this is something that has been overdue. If you've been following my channel, I've talked about this, that the stock market, they will see some issues. We will see some issues in the stock market at some point. But today's issue really in the stock market, where prices are coming down, really, it's just as regards a data point that came out today. So there was this data that was released today, and you can see it here. It says global stock sell-off deepens after disappointing U.S. jobs data. So what it is that the U.S. jobs data was released today, and it showed that unemployment is ticking up higher in the United States. So unemployment is increasing in the United States, and usually this is an indicator that the economy is slowing down, which means that the U.S. economy is slowing down and is heading towards a recession, and that is not a good thing for the global economy, because we all know that the United States is at the center of the global financial economy. So if the United States goes into a recession, it's going to affect the world directly or indirectly. So that's not a good thing. So when this jobs data came out today, a lot of investors have just gone into panic and all that. But that was not the only thing that made people panic today. A lot of data points have been coming out in the past, but this one just solidified, it just cleared all assumptions that it looks like the US economy is heading into a recession. And if you take a look at this article from the Market Watch, it says here the US economy is getting closer to a recession. What is the Fed waiting for? So what they are trying to say really is they're calling on the Fed to take action, because usually when you have a situation where the US economy is slowing down or unemployment is ticking up, the Federal Reserve, which is like the US central, which is like the central bank of the United States, they will step in, to sort of put things in place to make sure that that unemployment rate comes down, and also there are and I mean the price stability. That's what they call it. So people are expecting the Fed to do something, because it feels like the US is about to go into recession. So they are expecting the Federal Reserve to act in their capacity to sort of provide liquidity, or do whatever they need to do with their tools to make sure things are right. So that's what this article is all about here. But like I said, there's been data in the past, right, that has been pointing to the fact that the US economy has been slowing down. But those data points, a lot of people, they were not solid. So a lot of people could easily just ignore them, right? But we are beginning to see more data coming, like what we got today from the jobs report. But also, Amazon released their earnings, a couple of days ago. I think it was yesterday, and it just showed that things are really slowing down. And it's important to understand, when companies like Amazon and Starbucks are complaining that are saying that revenues or earnings are not coming as expected, it means that the consumers are not spending as expected. So companies like Amazon, companies like Starbucks, consumer discretionaries, they are good bellwethers to judge, how the consumer is feeling. Do you get? It's like you having a shop close to your house, right? If the shop owner wants to judge how the neighbor who is feeling, he can use the traffic that comes into his shop. If he stops seeing people in the shop, you understand that hey, it looks like a lot of people are facing financial issues. So when we start seeing companies like Amazon report missed earnings, it just means that consumers are not spending as they ought to. And consumers have been spending. Consumers have been spending from cash. They moved from cash, they moved into credit card. They moved from credit card, they moved into buy now pay later. So what it really means now is like consumers have exhausted all their options. If things are beginning to get to this point, it means that people have maxed out. Cash is low. People have maxed out their credit card. People have maxed out their buy now pay later options, and it just feels like the consumer is not in a good place right now. And you could see that from the earnings from Amazon. We could also see that from the earnings of Starbucks. Starbucks, a lot of people buy coffee in the morning, but when Starbucks start noticing that the consumer is not spending, people are not buying coffee in the morning as as much as they did. You begin to it gives you an understanding of what the economic situation of the customers. If people are preferring right now to put a kettle on the stove and make their own coffees at home, it just tells you the state of the consumer, and that is why a lot of people are panicking today, because all these data points are now coming together to point to the fact it's painting a picture that looks like the United States could be heading into recession, and that is important for all of us to understand. So, if you take a look at this article from Market Watch, it says that Wall Street's fear gauge surges as sell-off sinks stock. So, what is happening is that a lot of people are afraid, because all these things, it sort of brings about uncertainty. And investors love certainty; they love to know what's going to happen next. But when things like this start happen, it creates some sort of volatility in the market, right? And it creates uncertainty, and people will begin to, sort of move away, find safety, if I can put it out. They'll start to find safe haven assets, and I'm going to talk about that in the next video. But that's what is happening, right? And there is actually an index in the stock market that tracks the fear, and tracks like volatility in the stock market, and that's called the VIX. So when you start seeing the VIX go up, what it means is that people are a bit skeptic about the market. There's uncertainty in the market, so that creates volatility. And you can, if you're a very good investor, you can take advantage of that volatility if you know what you're doing. Also, another news that came out today that was, obviously a big shocker. The company Intel that makes, the processor and the chips, they announced today that they were going to cut 15,000 jobs. Remember, the first article I showed you was the fact that the US unemployment was rising up. Now, a company like Intel coming out to say that they are going to cut 15,000 jobs, worldwide, it just shows you that that trend, that uptrend of unemployment is heading upwards, because, companies are still cutting back. Companies are still cutting and cutting. It means that consumers are not spending, as much as, the companies would want. And if you see, take companies like Amazon, for instance. If they get more traffic, if they get more people spending, they begin to increase their fleet. They hire more drivers, they hire more people in the warehouses, they hire more, the hiring, it just gets bigger as the consumer spends. But when the consumers start cutting back, they also start cutting back, right? They start reducing the number of drivers, they reduce the number of packagers, things like that. So all these things have a ripple effect on the economy. So that's what we're seeing right now. So Intel as well is cutting back 15,000 jobs, and that is a big deal, for a company like Intel. And this has been on the trend. A lot of companies have been cutting, have been letting go of staff for a while now. But it has not been on the on the headlines. So we need to understand what is going on. How all these trends, are moving, because they are really important. Okay, now what I want to talk to you about is that if you've been following my channel for a while, I always talk about this water system when it comes to the global financial system. When you see money leaving one place, money is going somewhere. So for instance, what is happening today now with the stock market, we see that the stock market is selling off, meaning that people are taking money out of the stock market, because people feel like, the US may be heading into a recession. The stock market might not be a good place to keep your money, at the moment. But like I always tell you, in this water system, money never really leaves the system. It just flows from one place to another. So in our own, analysis, we need to find out where money is going to. If money is leaving stocks, remember, there was a time when money was not in stocks. Money was somewhere else. Then money came into stocks. But now money has been in stocks for a while. And I said this I've done videos where I said this. Money has been in stock for a while. But now it feels like money is about to leave stock. So we have to track it. We have to be able to, forecast and say, okay, where is money going to? As its living stocks. Because if you know where money is going to, you can position in that place, and you can take advantage of, you can wait for money when it comes. I always talk about this thing like waiting for the wave. You have to be on the sea. So if you know where money is going to, you can go ahead of money, wait for money there, and money will meet you there. And that's something that we need to understand. And if you take a look at this Bloomberg article, it just summarizes everything. It says flight from stocks accelerate as fears grows, fare too slow to cut. So what he's saying is that everybody is leaving stocks. But if you take a look at the other part of this article, it tells you where they are going to. It said flights out of global equities is becoming a stampede as increasing signs of a US economic slowdown spur a pivot towards safe haven assets of treasuries and gold. So what is it telling you? See, people are leaving stocks and they are heading to gold. They are heading to treasuries. They are heading to gold. So if you're somebody that has been in gold when the money was not in gold, now that money is moving to gold, you're going to make a profit there. Do you get? And that is how it works. So when money is in gold, you have to think, where is money going to go to next? Do you get? Where is money going to go to next? So you can go position in that place so that money can meet you there. That's how the whole system works. Money just moves from one place to another. And right now we can see that money is leaving stocks. As money is leaving stocks, money is heading to gold, right? Because people are scared. People are, there's uncertainty in the world. And I'm going to do a video about gold. In my next video might be about gold, just to tell you, what is happening with gold at the moment. So, but I want you to understand the whole concept of the financial system. Money moves from one place to another. And like I always said, at some point, money is going to move into crypto. But we have to understand when that time comes. When money is about to move to crypto, based on this understanding, you will be able to tell, and you can position adequately. But for now, what we're seeing is that money is moving to gold. Money is moving to safe haven assets because people are uncertain. And a lot of people feel like, the Federal Reserve might step in too late. They might step in too late. And by the time they step in, they might already be damaged in the economy. So that's the fear that is in the stock market right now. So guys, I just thought I'd bring you that update today just to give you a good understanding of what is happening. Remember to like this video, turn on the notification bell, and subscribe to the channel for more videos like this. I'll see you guys in the next one. Bye for now.